Good afternoon, everyone. We welcome you to the Q2 FY results conference call of Visaka Industries Limited. We have with us from the management Mr. Vamshi Krishna, Joint Managing Director, Mr. Shafirullah, Chief Financial Officer, and Mr. Vinay Bhatija, Head Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I would now like to hand over the call to Mr. Krishna for opening remarks. Thank you, and over to you, sir.
Yeah, thank you so much. A very good morning and a very good afternoon to everybody on the call. Thank you all for joining and participating in our earnings call for Q2 FY22. Trust you all have safe and your families are safe, and wish you a season's greetings for the season. The economy has picked up well and showing clear signs of recovery from COVID. The performance of all our businesses at Visaka has done well in this Q2 and season for us. In the building segment, the VNex businesses have done exceptionally well and recorded the highest ever quarterly revenue. The revenues have grown by almost 37% year on year. The domestic segment for V boards has outperformed and the exports also improving. We expected healthy growth in this business throughout the year, and due to the increase and re-stabilization of demand in the real estate, things are looking good in that space. The new boards plant which we have been talking about also has started the trial production this month, and we plan to start the same by December, as mentioned in our earlier communications. The exports have taken a tough time because of the rate increases across the world, but we are confident that the business that we are doing will be stable, and look forward to increasing and improving the same. The roofing segment has done comparatively well during this off-season. The rise in input costs and selling prices reduction in the Q2, typically because of the off-season, has led to some drop in margins this quarter, but we expect the roofing business will continue to do well as we see a sustained increase in the rural incomes, which will create good demand for us coming this year. And also the effect of other factors where we got good monsoons this season, and we expect that to help us increase our business in the coming months. The expansion works that we have taken up in the Raebareli unit in Lucknow are also in good speed, and we are likely to complete this by Jan this coming year. The synthetic yarn division also has done well. Markets are recovering from COVID and going back to the normal stable textile market. We see good contributions in this space, and revenues should increase and improve going forward. Coming to the Atom division, the solar integrated roof has shown a good growth in revenues compared to the previous year, previous quarters, and the momentum is picking up. Revenues have grown almost about 25 to 28% in this segment. And we've also started exports to countries like Africa and the Middle East, which is a good sign. And we are seeing good opportunities in the export market for this product as well. uh, talking about the new initiatives. As you all are aware, we launched a couple of new products and new lines a couple of months ago, and this is only helping us strengthen our resolve towards green and sustainability businesses. We have set up a sustainability department which would help us be on track towards this resolve. Our new initiatives are completely focused towards green India, sustainable India, and the world with our innovative products. As most of you would know, in our last call, I had explained about the concept of Atom Charge, which is EV charging stations powered with our Atom roof. I'm happy to share with you that I've kick-started off and we have launched 10 charging stations on a single day last month, which was a great feat and achievement by the team. And we are operational in almost 11 states right now with 11 charging stations. And the locations and details are there in our detailed presentation. So this business would be in tandem with the EV industry and the EV growth that we look at. I would say that we are in the right space at the right time with the right products. So in the market, if you really look at the VNext businesses and the Atom business would be of great synergy and drive, creating a great unique proposition in the market in terms of being sustainable and offering a sustainable infrastructure compared to the various alternatives in the market. And the utilization as we speak will increase as more and more EVs are on road and with more charging stations be added. As I also mentioned, Atom Charge is looking at partnering with other charging facilities as well and other businesses with large networks. And we will be soon sharing some interesting news on that front as well. And all of this, we are building a great app. We are going digital with this. We have a great app to support the entire Atom Charge network that is totally based on IoT. Coming to Atom Life, which is Visaka's new initiation in the space of sustainability, which will offer fully sustainable, eco-friendly green products, a one-stop shop for sustainable products. And the first store is under construction as we speak, and it should be out in the next month or so, maybe 2 months. We should be having our first Atom Life store launch as well. So summarizing the company's current position, with the world leaders meet at the recent COP26 and G20, our PM also has committed that as a country we should go net zero by 2070. And this is great news for us as a company because we are very synced and in line with the green initiatives, the green targets that are there for the country and the world. We would be adding great value in the market with the products at hand. Just to share something interesting, we are also working closely now with the Indian Railways, which has committed itself to be net zero by 2030. Our product Atom would be a great fit, a perfect fit for the railway station roofs, be it bus stands or the small government setups across the country, to add to the warehouses and the other corporates that we are in touch. All of this simply being a roof replacement like Atom, which is a roof that generates power, would be a great first choice given its space utility and the higher generation of electricity compared to any in the market. Atom also offers a faster payback compared to traditional roofs and traditional solar panels. Just to share some good news with you all, we've managed to crack good orders and I've got repeat orders with Hindustan Aeronautics, with Atom as well. We are getting repeat orders from the large hospital segment that is across the country. We're getting good orders from companies which are in the data center space, and also traditional large family enterprises across the country. With US and India and other major economies committing to infrastructure spending, leading to improved economy and higher disposable income, this coupled with lower interest rates and housing sector boom, we see that both the businesses, we both and with Atom, have a good future and a good growth rate that needs to be tapped on. Not to mention builders like Mahindra, Life Spaces, Godrej, Shobha, and Prestige, and other builders who are going aggressive in the commitment to green products. We both will be their first choice, as we are the least carbon emission generating product in the building industry today, which is certified by IGBC, CII, and many other reputed agencies. The extension of both the above, Atom and we both, have been our new initiatives, which will be used in our new expansions of Atom Charge and Atom Life as well. Our yarn segment, which we call Wonder Yarn, is also developing recycled plastic PET bottles, yarn that is made out of that, and is a huge hit in the European and American markets. Today, we've touched successfully about 15 to 20% of our monthly sales in this segment, which is a completely new space for us. Uses in the European market entail making tablecloths, suitings, and even curtains, while it is also used to make battery separators in many parts of the world. So if the future is green and sustainable, we feel that Visaka is actually at an inflection point, a pivot point, where our hard works over the last 10 years in this space are looking to be in the right direction. We will be in the right space with better expectations in terms of our performance and the market. Just to give you a snapshot of our financial performance, the total revenue of the current quarter is about 295 crores compared to 226 crores of the previous year. That's an increase of about 29%. Our EBITDA margins for the current quarter is around 15%, whereas for the current half year it is at 17%. PAT for the quarter is about 24 crores as compared to 22 crores last year, showing an increase of 7%. PAT for the current half year is 64 crores compared to 57 crores, an increase of 13% compared to the previous half. The building product segment revenues, Q2 revenue, was 241 crores compared to 202 crores in the last quarter, showing an increase of 19%. Segment EBIT margins for the quarter were 13.4%, and for the half year it is 16.8%. The yarn business revenue was 51 crores compared to 24 crores in the last Q2, showing an increase of 100%, but that is more of stabilizing of the market rather than seeing a growth. But the margins remain good at 15%. The interest cost has come down from 3 crores to 2.4 crores this quarter. Overall, I'm happy to announce that all the businesses that we have touched upon, starting from our traditional roofing business and the textile business, are seeing stability, and going forward we will be seeing a good increase in the same. The new businesses of VNext and Atom are taking good shape, and we expect good contribution in the coming months and the years to follow in terms of their sustainability and their green impact on the society and the planet. Overall, they would lead to significant contributions. And coming to the new businesses like agriculture, using which are having high growth rates in the market. The market for the roofing is robust, and we expect to continue it in this way with the new unit going to come in around December, Jan. The VNex also is in a growth record with record numbers with our new plant coming up. The yarn also is showing double-digit margins, and this is likely to continue both in domestic and export as well. We would like to conclude by saying that the company is going in a good direction. We are all charged up. The team is very passionate and determined to enter the new spaces of sustainability and capture larger market share with our innovative products and being innovative in our mindset as a team. So thank you all. That was a crisp brief note from my side, and look forward to interacting with you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shubham Agarwal from Acuitas India. Please go ahead.
Thank you for the opportunity and good afternoon, team. Sir, my first question is related to the building product division. So as you mentioned, we delivered a very healthy growth of 20%, and in fact, our volume growth was also pretty healthy at close to 15%. But if you see YOY, our margin declined by 600 basis points. So I wanted to understand what are the key raw materials where we are facing challenges, and what is the increase in raw material price, and have we been able to pass on some increase?
Yeah. So first off, I think the first point is that we are in the off season of this year. So typically, margins do take a hit in this time of the year almost every time. But having said that, as we have been indicating, there is a huge impact on the incoming raw material costs, mainly cement and our pulp costs for the boards, and then our asbestos costs because of the import costs. Right, the logistics costs have taken a huge hike. In fact, some places have even gone up even 10 times in terms of. So in Q2, it is a tough task to push everything onto the consumer because of low demand typically during this time. So that's the reason you notice a slight bit. But otherwise, we are confident that
I'm sorry to interrupt you, sir, but we cannot hear you, Mr. Krishna, clearly. Your voice is breaking.
Yeah, I couldn't hear the answer properly.
Is this clear? Is this better?
Yeah, sir, we lost half of the answer, sir.
Yeah, I'll repeat myself. If you just confirm that my voice is clear now, I'll go ahead.
Yeah, it's clear. I can hear it.
Okay, great. So I was just saying that typically during Q2, our pricing and costing point of view, pricing does come down typically in the Q2 because of off-season and low demand. Unfortunately, this time we had to face the logistic costs, which took a huge hike due to the overall global scenario. So that being in terms of our pulp usage and our asbestos usage. Having said that, the other part of the costs had a huge impact on was cement. Our cement costs actually took a huge hit increase due to various factors in the market. So these are primarily the areas where we had a price increase to deal with. But having said that, our business model is robust, and we feel that once the situation stabilizes in terms of the raw material costs, we'll be back on track. Having said that, yeah, I think we are looking forward to a good Q3 and Q4, because that's where we can pass on a little bit to the consumer as well as the demand stabilizes.
Okay. And sir, specifically talking about the VNext division, so we delivered a healthy revenue of 70 crores, but what would be our EBIT margin in this division in the current quarter?
So VNext, as I shared last time as well, we are operating between 15%. So we are still operating in that margin as of now.
Okay, so EBIT margin in this division has remained constant at around 15%.
Yeah.
So it would be fair to assume that most of the margin hit was mainly because of the asbestos division.
We did take a hit in both as well, like I said, because of the pulp costs. That's why I had given a range of 10 to 15. It's right now in that space.
Okay.
But I think once the logistic costs, actually, to be very honest, I think the logistics costs are really abnormal. I think every industry tries to take the best as they get the time and the situation. I don't think that this cost will be a permanent cost in terms of logistics. I think they're just trying to make the best out of the situation. Once situation stabilizes, I think we'll be seeing better results. Yeah.
So logistic cost mainly you would be referring to the imported raw material, right?
Absolutely.
Okay. Fair enough. Sir, and secondly, given that now we are operating close to optimum capacity utilization at VNext, and we did a healthy volumes of 1,87,000. But last year, our December quarter total volume was close to 2 lakh. So can we expect to do better volumes in December quarter in building product division?
So we are trying, we are working in that direction, actually speaking, and that's the reason we are going for expansion in both the divisions as well. Mm-hmm. So more than December, I would feel that maybe Q4 will be a better signal to see increased volumes. But definitely Q3 also will be better compared to what we have been seeing and as the trend goes. Yeah.
Okay. And when it comes to yarn division, obviously the realization and margins have gone up pretty significantly. So previously we used to do close to 60 crores. So can we expect to do better than 60 crore run rate every quarter henceforward with a similar margins right now?
To be honest, the yarn business has maintained its traditional margins. If you look at year on year, apart from the COVID space. So as you know, the yarn business is of a niche market. We cater to a very niche market in terms of what we supply. But going forward, we are trying to bring in new products, as I've been sharing with you, in terms of the market demand. And we do, our aim is to maintain the same, if not higher, of course. Our aim is to maintain the same, and we feel we will be able to do that. Yeah.
And we are not planning to increase the capacity in this division?
Not as of now. Once we stabilize the new products, like I said, that what we are trying is to launch new products with the same facilities, with the least R&D costs, because that's the mindset we are trying to work with right now. As the volumes picks up, like let's say tomorrow sustainability business of yarn also goes up to, let's say, 30% and above, then definitely we'll be looking at adding. Having said that, this comes after our recent expansion just 2-3 years ago. So I think we are in a good track. As the business increases, we'll be very happy to look at expanding on that front as well. But as of now, there's nothing on the thing. Yeah.
Fair enough. And coming to the autumn division, so you did mention that our revenue growth was close to 20 to 25%. But in absolute term, what would be our revenue last quarter?
So actually, if you look at the entire business of Atom right now, We started about 2 to 3 years ago, right from inception. And COVID year was, I think, Atom and textiles, both I would say. Textiles because of the entire market situation, and Atom also has taken a huge hit, both of them. So the number point of view, we would have reached almost about 5 megawatt now. So maybe around 10 crores is what we'll be seeing. Okay. But going forward, I think we're very confident that this year the kind of orders we are getting, so we're getting a lot of repeat orders for a new product which is non-existent. Is always a good sign to get repeat orders from established clients. So we are in that space right now, and I think as that increases, maybe in the next 1-2 years, there'll be a very good transition from traditional roofs and traditional solar to a product like Atom. So we are quite bullish on that. Yeah.
Okay. So basis our current capacity, what kind of revenue that we can generate out of it?
So like we said earlier, Atom on a complete basis with the existing capacity, we can generate about 75 crores.
Okay.
On a full capacity utilization. And then with an additional capex of hardly 5 crores, we can double the turnover in that. So that's the position that we are in with Atom. So quite literally, we are waiting for a takeoff to happen, like we've faced with VNext. How the gestation period was quite long in VNext. We are not expecting the same gestation in Atom, given the awareness of solar and rooftop solar in particular. So we expect to reach that quite soon. Yeah.
And lastly, on the new initiatives, so given that we have already launched 11 charging stations, so can you please elaborate on the unit economics, how much we are spending on each charging station, and what kind of revenue and margins that we are potentially seeing probably in the next 2 years?
Yeah, absolutely. So actually, to be very honest with you, we have a very interesting plan for Active Charge in terms of the overall dynamics. And we've just launched the 11 stations last month. So we have to see in the numbers roll in the next couple of months. I'll be able to share this offline with you in terms of what details and specifics regards to that. But I just want to give you confidence that we are trying to develop something interesting at this stage. So to give out numbers would be difficult. Yeah.
No problem. Fair enough. We will take this offline. And again, congratulations on a very good set of numbers, and best of luck for all the new initiatives that you are taking.
Thank you.
Thank you. A reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Satish Kumar, an individual investor. Please go ahead.
Hello, sir. Congratulations for the good performance in the challenging time. My first question, in the Atom charging segment, are we talking with any major players like Tata, petrol bulk chains like HP, who are all entering into EV charging segment? If you are talking, are we seeing any positive response from them?
Yeah, absolutely. So actually, the concept of Atom Charge for us, the play is very different because we will be very strong in the whole infrastructure play. What I mean by that is today's charging stations are heavily dependent on thermal power again. If you really look at all the developments that have been happening, not everybody has looked at the power source point of view. That's where we will be adding very good value in terms of solar generating with the roof itself. Having said that, we are having a very exciting discussion with many of the players, as you have mentioned already, because we come into the space of EV charging as an infrastructure support. And that is where there is a huge lacuna in the market as well. People will not be able to generate the highest power at the smallest area available, and that is where Atom comes in as a really good product fit. So yes, we are talking to answer you in short. Yes, we are talking to the parties mentioned by you and also others who have large networks across the country. The model that we are looking at is to tie up with large network individuals, corporates, and other businesses, wherein we can develop infrastructure for them to offer charging stations. So that is one of the routes that we are exploring. Yeah.
Okay, sir. In the solar roof segment, so in the FY21 annual report, our pipeline was around 20 megawatt. FY22 annual report, it is 10 megawatt. So reason for the reduction, it is due to COVID, sir, pipeline reduction.
Yeah, but we are seeing an uptrend now over the last couple of months, and we feel that this year going forward it will be definitely better. Yeah.
Okay. Asbestos fiber, regarding asbestos fiber, I think we are importing more than 90% from Russia. In case any mining challenge in Russia, how we are prepared to handle the situation, sir?
Sorry, I missed. In case of what? I didn't hear.
In case of any mining challenge in Russia, mining.
Actually, there are two sources. One is Kazakhstan and one is Russia, and we have healthy tie-ups with both the sources. And as of now, we foresee no challenges in that space. If there are, we are always working on alternate products in terms of making it, and we do have alternate products ready in the market. So we are not seeing any challenge per se. But even if they are, just to say that we are geared up with alternate products. That's not an issue for the company. Yeah.
Okay, sir. Any plan to release the pledge in near time, sir?
Sorry, any time? Sorry?
Any plan to release the pledge? We have pledged, right, sir? Any plan to release in short time?
I think we've reduced almost. I think there's a very small amount left. I think Mr. Sheffi will be able to comment on that. But as of now, we're almost. I think
only 7 lakh shares are pledged, sir, out of 160. So it will in near term it will be removed.
Yeah.
We will be able to relieve this.
Okay, so one last question. In the VNext board on the panel segment, what are our competition companies, sir?
In the VNext space?
Yeah, VNext board on the panel
space right now, I think the closest competition would be Everest Industries. But as of now, we are having the majority of market share. We have close to more than 35% as of now in the market. After that, there is Ramco and Swastik as well, but they are doing much smaller volumes compared to what we are looking at. Yeah.
Okay, so which companies are initially that company? Major company, which one, sir? Which industry?
Everest.
Everest. Oh, okay.
Yeah.
Okay, sir. Any plan to enter into MDF segment, sir?
Actually, we are exploring, but not as of now. Nothing yet.
Okay.
We are focused on the businesses we've touched upon, and I think we are very bullish to create a large impact in each of the spaces. So, in due time, maybe nothing now. Yeah.
Okay, sir. In the VNext segment, how difficult are new companies to enter? Can you share? Can you give your?
So I think a couple of things to note here. VNext point of view, one is the raw mix, right? In the entire business, the raw mix would be one of the key parameters. Getting the raw mix right will be a challenge for new players to stabilize the quantity and quality of the product. And second is the network. Over the last 10 years, we've spread to almost about 2,500 to 3,000 selling points across the country. And we are the largest at that, and we have the largest network and the volume with regard to the quality that we maintain. So we will not see many companies try to enter. Even if they enter, it will be a very uphill task for them, given the qualities and strengths that we hold as a company. So I trust that answers your concern.
Okay. Thank you very much for all the answers.
Thank you.
All the very best for your all the ventures, new ventures. Thank you.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Vibha Jain from Anand Rathi. Please go ahead.
Yeah. Hi, sir. Good afternoon. Sir, my question is regarding on pricing environment. Sir, like you said that there is a pressure on input cost on all the fronts like logistics, cement and all. So, sir, have we taken any price hike in October, November to pass on the cost? That is my first question.
Okay. Yeah, so we have taken a price hike of about 5 rupees or 7 rupees, 5 to 7 rupees. But like I said before, during off season for any business, it's hard to get that demand pull. When the demand pull is weak, to get the price increase. Typically, what we expect is during Q3, Q4 is when the trend starts going back up. So that's the trend that we are looking at again.
Okay. So in Q2, was there any price cut because of the pressure, like you said, in the competition? Like one of your peers also mentioned that there was pricing pressure. So is that because of the seasonality or like something else?
It is always there, ma'am. Actually, if you see, the every year trend as well, Q2 normally has a price cut because we are in the construction space, and the monsoon season typically no construction happens.
Correct.
Due to the rain. So that time demand is weak, so it is but natural for pricing to take some pressure. This year, compared to the regular trends, there was a huge pressure with the input costs and raw material logistic costs that we had to face. So that's why this year is slightly unique compared to other years. But this is a general trend. There's nothing specific to this quarter or this year as such. It's a general trend that works out. Yeah.
Yes, great. So, sir, the price hike that we have taken of rupees 5 or 7, so that will be suffice to pass on the input cost pressure that we are facing?
No, absolutely not. That's what I was sharing earlier as well. Going forward, I think Q3, Q4 would be a better indicator of that. Yeah.
Okay, great. And sir, also can you help me up with the capex for FY22 and for the next year on our projects that we are currently going on?
So the projects going on right now, both put together, will be close to 150 crores. That's the outflow that's happening. And next year, we are concentrating more on the new businesses like we shared earlier. We'll be able to share a more concrete plan in terms of our deployment and investment plans in the coming months. But the trend is in that direction. Yeah, in the traditional businesses like VNext and the AC, we are close to about 150. And coming forward, we'll be sharing with you more details on the new project investments. Yeah.
Okay. And so lastly, on export, like you said that we are exploring the export market in Middle East, South Africa for Atom and VNext. So how are we currently on it and what is the progress there? Can you please share?
Yeah, so actually speaking, all the new products, both VNext and Atom, it's seeing huge traction in the export market. So if you really look at in terms of the construction that's going on, it's heavily shifted to the new age drywall systems, and that is where we are seeing a huge benefit for VNext. Although the expansion plans need to be revived across the world, COVID did disrupt the large plans of investment in terms of infrastructure. But like we are seeing, US just announced their infrastructure plan investment plan just hardly a week ago. So these type of moves will definitely help us, and the products like VNext increase their share in the global market. And coming to Atom, I think we are looking very, very bullish on the African space.
Okay.
And by African, just to share with you, is the power transition, right from thermal power to solar to other renewable sources. Unfortunately, thermal also was not big in South Africa or Africa per se. Because of their economic conditions. So we are entering that market at a right time where both housing and power, these two which are one of the major requirements in Africa, and I don't want to limit myself to just saying Africa, but globally, the whole challenge of housing plus power, I think we will be able to be significant contributors with our unique product offering. So that is what we are really seeing happen. And in fact, if you really compare to the other in the same category, you will see that our revenues and our decisions in the market are towards this space of housing and power, which we are getting a benefit out of. That will be our presentation with as well.
Okay. So, sir, what is currently the share of export in our overall revenue, and what are we targeting in coming years?
So just to give you an idea, maybe around about 25-30%, both in textile and in is our share of exports. We also want to highlight one point is the margin game, right? That's always very specific and of highest concern to us in terms of where we get the best margin is where we would sell. So over the last couple of years, we had a huge concentration in India. And in fact, some of our competitors tried to take an export game as well. And unfortunately hit a rough patch there. And that is where our contribution or value comes out, where we took a decision to concentrate more on the Indian market, and we see that going forward, India itself will be a huge pull in terms of demand. Having said that, we would try to maintain good ratios with regard to keeping margins in mind as well. So we are here to capture as much as possible, provided it happens at a good profitable rate. So that is our outlook, just to share with you.
Yeah. Okay, that's great. Thank you so much, sir.
Thank you.
Thank you. Reminder to the participants, to ask a question, please press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Yeah. So thank you everybody for attending the call and asking some queries. We'll be very happy to interact with whoever needs further clarifications offline as well. Mr. Vinay, our IR, is always available to connect you with us. And just to share that we are in the right direction, and we are looking very positive and look forward to adding value to our products. So thank you so much, everybody. Have a great day, and let me see you soon next quarter. Thank you.
Take it.
This is the operator, sir. We have one participant in the question queue. Shall I promote?
Yeah, please.
The question is from Chirag Vikaria from Gujarati Finance. Please go ahead. Mr. Chirag, please go ahead with your question. Your line is unmuted. Mr. Chirag, may we request you to please go ahead with your question? So there is no response from the line.
Yeah. Thank you, everybody. Thank you.
Thank you. Ladies and gentlemen, with that, we conclude today's conference call. On behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.